24-25 season, along with the wheat incentive planning prices. Maize has been set at $376.48 per ton, which is an increase from $335 last season, and the same price applies to traditional grain. Soybeans is priced at $580, while sunflower is set to sell at $668.98. Additionally, the pre-producer price for wheat is $451.35. Earlier on, we spoke to the Zimbabwe Farmers Union Operations Director, Dr. Prince Kuipa, on whether the pricing would be enough to cover costs endured by farmers.
It is a fair price when we consider our own cost of production, especially for the smallholder farmer. We have already in various platforms indicated how our cost structure is very high. And I think at 376, because when we were looking at our own cost model for smallholder farmers, it was around 340. So at 376 there is a small increase, which we think will go a long way in trying to make the farmer viable, and also to ensure that the farmers will go back and produce the same crop in the coming season.
Now, while the price may be good, ZFU has said that late payment of some farmers by GMB still remains a challenge.
No would be my answer, but specifically for wheat, there were delays in payment for wheat, and some farmers have not yet received their full payment for wheat as we speak. There are also some farmers who are yet to get paid for cotton that they produced last year. For maize, we have some farmers, but not as wide. The problem is not as bad as in wheat and cotton.
The union also emphasized that the price marked by the GMB does not determine profit for the farmer, but rather it is their productivity that matters.
It's not a function of the price only. It is also a function of the productivity, which means the farmer, in order to make money, must also be productive. And therefore, they have to efficiently observe all the good agronomic practices for that commodity, including weeding, including timely planting of that crop, including a timely application of the fertilizers, basal and top dressing, and also pest control. So the viability of the farmer is not only dependent on the price, it is dependent on various other factors.
But the question is, how do these prices fare compared to our regional peers? Faith Nyadia gives us a breakdown.
It's a very good evening to you, Wadza. Thank you so much. Now, last year, the producer price for grain was $335, and this year it has been significantly increased to $376. It is also important to note that the farmers' unions had tabled a proposal of $340 per ton as the producer price this season, and that price has been surpassed. Now, I want to put this into context in comparison with some regional prices. I'm just going to step a bit on the side so that you can see. Now, in Zambia, a ton is being brought for $264, and in Malawi at $317. And over in South Africa, price is determined by global supply. Looking at these numbers, it might now seem like Zimbabwe is offering a very competitive price, but it all comes down to the production costs. Earlier on, I did speak to Dr. Kuipa, and when it comes to pricing within the region, Zimbabwe still has a long way to go in terms of competitiveness. Dr. Kuipa also highlighted that our production costs are higher compared to other countries in the region, making our commodities less competitive in the export market. Furthermore, our productivity levels are still relatively low, with average maize yields of about 2 to 3 tons per hectare. That is far below the potential of 8 to 10 tons per hectare. This productivity gap, combined with those high production costs that we did mention, means that our farmers will continue to struggle to be viable regardless of the prices that are being offered by off-takers. Now we are just waiting to see how GMB will pay farmers in terms of the ratio between ZiG and United States dollars.
And in another story, Zimbabwe's real estate